What's going on, everybody? Welcome back to our Becoming an Apex Trader, the DBT Method series. This is going to be our fifth and final video in this series, and today we will be talking about order flow. If you guys have not already, be sure to check out our first 4 parts in this series. We started off with candlesticks, we moved on to market structure, then we talked about indicators. Last week we talked about volume profile, and finally, we are talking about order flow today. Now, before we get started, just a reminder about the giveaway. We will be giving away Apex accounts, Addis accounts, laptop at the end of the series, and Discord access as well. If you guys would like to get entered in this giveaway, just follow the details on the screen right now. Make sure you're subscribed to the channel. Be actively using our discount code on Apex. Code is BREW, B-R-E-W. Make sure to comment on each of the 5 series videos. Each comment is a ticket. You can provide your Apex receipts using our code up to 20 tickets because they allow you to have up to 20 accounts. The only account that is excluded is the 25K. If you guys are Discord members, you receive 10 tickets as well. And currently our Discord is 40% off with code Black Friday 2025. All one word, no spaces. Make sure to email all your tickets to giveaway dejabrutrading@gmail.com. Before we get started, let's recap what we talked about last week. This is a very important recap. If you guys have not seen the volume profile video, make sure to check that out, or just make sure that you understand basic volume profile concepts. If you do not, then understanding what I'm going to talk about when it comes to order flow and footprint is going to be extremely hard to understand, extremely confusing. So make sure you guys understand volume profile before watching the rest of this video. So in our last video, we talked about profile shapes, the Ds, the Bs, the Ps, the lowercase b's, the trend profiles, forming a trade plan and a bias with volume profile, the different types of profiles like the cash, the full session, the afternoon, the difference with market profile, and finally the types of trades that we take with volume profile. Now, today, we are going to be talking about the basics of order flow, the types of orders, like market orders, limit orders. We're going to talk about delta. Why does it matter? Like cumulative delta, tick-by-tick delta. Breaking that delta down into a footprint. So maybe a 30-minute, maybe a 5-minute footprint. We're going to talk about different patterns with the order flow. So absorption patterns, exhaustion patterns, the clusters, the nodes, right? We're going to talk about tape reading, how to use the DOM and the time and sales in your trading. And also to go hand in hand with that, we're going to talk about block trades. So watching the tape and seeing these very large orders coming in, and how can we use that in our trading as well. So starting off with the basics, we're going to get into the aggressive versus responsive. You guys have heard me talk about this throughout this entire series. The difference between the traders that are kind of taking liquidity and the traders that are putting liquidity out there, and they're kind of waiting for the market to come to them. That could be market orders, that could be limit orders, it could be stop orders, right? We're going to talk about what is delta, what does it mean, why does it matter, right? And the liquidity basics. Are we having good liquidity? Do we have bad liquidity? Should we be careful in our trading because the liquidity is very low? Or are we safe to trade because the liquidity is very high? We're going to get into that. What is delta? Well, delta is the difference between all the market buyers and all the market sellers. So if we think about the traders that are taking liquidity, the traders that are being aggressive, they really want to get filled right now, whether that be entering their trade or exiting their trade. Because if you think about it, stop losses are also pretty aggressive because they want to be filled immediately. When it hits that price, they want to get out of their trade immediately. Okay, so we take all those market buys, we take all those market sells, and we combine them together, and the difference between the two is known as delta. If there's more market buys than market sells, then that is a positive delta, and then vice versa for negative delta. Now, we can look at this delta in a couple of ways. We can look at it cumulative, like looking at it over the span of the entire day or the entire session. And we can combine this delta together into a oscillator, into a kind of like a moving average. That is the cumulative delta, right? And we can use that for maybe divergence trades. Maybe the delta is making higher highs and the price is making lower highs, that sort of thing. Or we can break that delta up into a tick by tick delta, measuring it on more of a footprint, right? If we're looking at a 30-minute candle, we could break it up based on each tick or each price movement, okay? We're going to talk about why this matters here in a little bit, what patterns we can use and how we can trade those, right? So I talk a lot about footprint. What do I mean by footprint? I'm talking about breaking this up into candles, into smaller segments. Maybe that would be the 30-minute candle, the 30-minute footprint. Maybe it could be a 5-minute footprint. If you guys are scalping, you could even break it down to like a 1-minute chart, or you could even go further than that and break it down into, say, a delta chart. I'm going to show you guys examples on Addis later with a 500 delta chart, where we break it down where every single candle is formed when there is positive 500 delta or negative 500 delta. And you could do this in many different ways. It doesn't have to be 500. It could be 1,000, 2,000, whatever. It's like time frames, right? Where it's personal preference. We're going to talk about breaking the footprint down into clusters and who is in control of these clusters. You guys have heard me talk about this quite a bit during this entire series about controlling nodes. Who is in control? How do we know if the buyers are in control or the sellers are in control? We're going to talk about that here in a little bit. And finally, with these clusters, with this footprint, there are two major patterns that we are going to look for. We are going to look for absorption and exhaustion. What do those mean and what do they tell us? How can we trade when we see these patterns coming in? And finally, we're going to close it up by breaking the liquidity down based on tape reading, the depth of market, also known as the DOM, level 1 liquidity, level 2 liquidity or level 2 orders, and finally, the really big orders that are taking liquidity, the block trades, right? Okay, so before I move on and get into Addis and show you guys my kind of complicated Addis workspace that has all these different charts with footprints and cumulative deltas, etc., we're going to get into a little bit of a whiteboard here. I'm just going to explain the basics so you guys kind of know what I'm talking about when I show you those more advanced charts. So first off, you need to understand what we constantly talk about with aggressive versus responsive, market versus limit, before you can really understand what's going on with delta. And then we can take that delta information and kind of break it down into those more advanced topics like footprint, cumulative delta, clusters, etc. So when I talk about aggressive and responsive, what you want to understand when it comes to delta and it comes to building nodes and it comes to clusters is when the market is pushing very impulsively in one direction, that would typically be seen as aggressive, right? Those buyers that are looking for a higher price are kind of getting what they want if it's impulsing to the upside. And same for the downside. The sellers are kind of getting what they want. The sellers that are maybe selling the low and then it keeps going lower, right? They're taking those very aggressive trades, but it doesn't matter because the market is still moving very strongly in one direction. During our last video, we talked about kind of the one time frame effect, right? And that's kind of what I'm talking about with those aggressive traders. Now, typically, when you're looking at this in a delta sense and an order flow sense, this would be extremely one-sided. You would have something that looks like this, where you have a very one-sided candle, which, by the way, let me explain what we're looking at here. On the left side, we have the delta clusters. So if they're very red, that means there's a lot of bearish delta. If it's green, there's a lot of bullish delta. And the right side of the candle is just a volume profile for that candle. In this example, it's a 30-minute candle. So when you have a very aggressive market that is pushing one directionally, it would look something like this, where the candle is showing one color, either very red or very green. Obviously, in this case, this is a bearish candle, so it's showing a very red cluster, a very red bearish delta, pretty much the entire candle. So that would be seen as very aggressive moving to the downside. Now, Being more responsive would be, let's think about how we have these two very strong clusters on this candle. We have the cluster kind of towards the high and the cluster kind of towards the middle. If we were being more responsive, then the market would be pulling back a lot more. If you remember back in my indicator video, we talked about the OTS trails and the 24 EMAs, right? You'd be pulling back and retesting these clusters of delta or these clusters of volume. And what I mean by cluster, I just mean kind of a group, right? If you look at this group of very bearish delta here, that would be what I call a cluster. Or if we look at this node right here, that would be kind of a volume node or a volume cluster, okay? So if you think about price pulling back and retesting those clusters or those nodes, that would be a bit more responsive. You're kind of waiting for the market to come back to you instead of just selling aggressively as it's falling down, right? Think about it more as like a pullback or a breakout trader. The breakout trader is being more aggressive. The pullback trader is being more responsive. And let's break this down even further. Let's think about market orders versus limit orders. If you are taking the market side, if you're ready to get in or out of that trade immediately, that would be a bit more aggressive, right? You would be taking an aggressive trade. You're not waiting. You're saying, hey, I'm ready to go right now. I want to get in my trade or out of my trade. Okay, so that would typically be a market order. That would typically be an aggressive order. If you're saying, okay, let's wait for it to pull back to this cluster. Let's wait for it to pull back to this level, X, Y, Z, right? That would be more responsive. You're waiting for the market to come to you. And how do people trade when they are waiting for the market to come to them? They typically use limit orders, okay? So if you're putting your order out there in the system, you are typically putting a limit order waiting for the market to come to you to fill that order. Now, there are exceptions to that. It could be a stop order where you're saying, hey, I'm going to wait and see if the market hits this level. Let's say that level is 100. And I'm going to put a stop order at 100. And we're currently at 95. If the market gets to 100, it's going to trigger my stop. And that would be either a market buy if we're trying to be a breakout buyer, or say a market sell if we're trying to close our trade. Maybe it's going against us, right? So that would be seen as kind of providing liquidity. If it was a limit order, if you're putting your limit out there, you are providing liquidity to the market. If it's a market order, you are not providing liquidity, you are taking that liquidity. Okay, let me go back to my whiteboard here and we'll explain that a little bit more. So if the market is moving higher and I want to be a breakout buyer, I'm like, okay, this is probably going to continue and I want to be a breakout buyer. I want to be a buyer immediately. I do not want to wait for the market to come to me. I'm kind of FOMOing. I have that fear of missing out. I want to get in right now. So I put in a market order, a market buy. I want to buy the break of that high. That means I am taking liquidity from the market. There has to be somebody who is willing to sell at that price. Therefore, I can buy what that person is selling, right? There has to be a seller on that high so I can buy the contract they are selling. Therefore, my market order is taking liquidity, and I'm hoping that we continue higher. Let's take the other side of that. Let's say I want to be a seller when price is pushing up, and I go ahead and put my sell in the system as a limit order. If I am selling above the current price, let's say the current price is here. If I am selling above the current price, I am putting in a limit order because price has not gotten to that level so far, okay? So when price begins to move higher and it hits my order, it's going to take that order and I'm going to be filled, right? There's going to be a market buyer taking out my limit sell. So now I am filled here on a limit order, and let's hope the price goes back down. because I am shorting, right? Now let's say that I get filled there. Price pushes up. I had a limit order to sell and I get filled. So this would be a limit order. I got filled. Now I'm in my short. If price goes higher, how do I handle this? It's going against my trade. What do you do when you're in a sell and it's going against you? And you have a stop loss, right? What is your stop loss? Your stop loss is a buy order, because how do you close a short? You have to be a buyer, right? I sold to open, I have to buy to close. Okay, so how am I putting that buy in the system? Most of the time, it is going to be a stop market order. Meaning once it hits this price, let's say once it goes up 10 points, whatever, right? My stop loss is 10 points higher. So once it goes up 10 points, it's going to trigger my stop loss, and I'm going to close my trade by once again being a market buyer. I am taking liquidity from the market to close my trade because I was wrong. I took a limit sell. I wanted the market to go down. It didn't do it. So now I have to be aggressive and get out of my trade. I started off that trade by being responsive. I waited for the market to get to my price. So I was being a little bit responsive, right? I was not being aggressive and getting in right away by pressing that market order. I was a bit patient. I waited for it to get to me. But unfortunately, it went against my trade and it continued higher and it triggered my stop loss. The stop loss was a market order. Therefore, it is a market buy. It closes my position. Okay? Now, think about that happening over and over and over again. This happens thousands of times a day, right? These are all the orders that are coming in on the tape. So we take all these orders together, all of the market buys and the market sells. It doesn't matter, once again, if it is a open or a close. It just matters that it is a market order. We're going to combine all of those market buys and all of those market sells together. So we take the basket of buys and we take the basket of sells. Excuse my sloppy mouse handwriting. We combine them together and this becomes the delta, right? Now, if there are more buys than sells, it would be a positive delta. It would be a bullish delta, typically seen as green delta on your charts. If there are more sells than buys, it would be a negative delta, typically seen as red. Okay? And then we can take that a step further and we can combine these together on many different price levels. And this would combine together into a cluster or a node. Okay? So more market buys than market sells, positive. More market sells than market buys, negative. And how we look at that, whether it's on a cumulative or a kind of tick by tick basis, that will determine if we're looking at a positive delta or a negative delta. Because if we're combining it for the entire day, then maybe that delta is still moving higher. If we're combining it on a level by level basis, maybe that level is negative, that level's positive, that's negative, so on and so forth. Okay. So it depends on how you are looking at it. That will tell you whether or not it's positive or negative. So going back to our example from earlier, if we're looking at a very one-sided candle, this would be extremely aggressive and it would be extremely negative because every tick, every level by level here is pretty red. It's pretty negative. If we are seeing more of a balanced candle, if you think about a D-shaped profile, it would have one side being slightly positive and one side being slightly negative. And this would be a candle that's going back and forth, right? If you think about what happens during a D-shaped balance, what is happening? You're selling the value high, you're buying the value low. Now, let's take a look at this delta candle and say, why is it positive on the high of the candle and negative on the low of the candle? But we are still ranging. If it was positive on the high of the candle, why aren't we going higher? If it was negative on the low of the candle, why aren't we going lower? You have to understand what delta is telling you, right? Going back to what we just talked about, delta is the difference between the market buys and the market sells. What does the market have to have if we have a ton of market buys? If we have a massive cluster of market buys, for example, the high of this candle, what does that also mean? That means that there is also a lot of limit sellers. There are a lot of responsive sellers. Think about when price is pushing into a value high of a D-shaped candle. What is happening there typically? We typically talk about you want to be a seller around that value high. So what do we typically see there? We see a lot of limit sellers, a lot of responsive sellers, pullback sellers, whatever you want to call them. They are putting their sells in the system, providing liquidity around that value high. They are being a seller around that value high. So as we are pushing into that zone of all of these limit sells, we are market buying into them, which therefore makes the delta look overly bullish because the delta is showing a lot of market buys. So basically what we could say is, in this little cluster right here, when we have this almost 400 delta, 330, 270, there were a lot of limit sellers there for those market buyers to be buying into. But if the price was not able to protect that zone and stay above that zone, they were being absorbed or exhausted, which we'll get into here in a little bit. Now, this is more of an example of exhaustion because the volume is falling off very heavily. If there was absorption, that would mean that there is a vast amount of volume coming in, a large amount of volume coming in, but it's getting stuck and going against whatever that prevailing delta is. So if the delta is extremely bullish and there's a very large cluster of volume on that node there, but it's not able to go above it, therefore the buyers are being absorbed. Okay. If the volume is falling off a cliff, like we see in this example here, where the volume is just dropping, but there's still a decent amount of delta there, they're being exhausted. Where that delta is coming in, but they were not able to build up a strong node on that high. Okay. The buyers are getting exhausted, therefore the price is coming back down. And I'll show you some more examples of this here in a little bit. But okay, going back to what I was talking about, when we look at delta, we can look at it as a large amount of market buyers coming in on the high here. We can look at it as a large amount of market sellers coming in on the low there. But we have to understand that the market has the other side, where if there is a market buy, there has to be a limit sell, and vice versa. Okay, so we can't just take this as, oh, there's a lot of bullish delta coming in. That means it's bullish and it has to go up. We have to understand there is another side of that market. Where all those aggressive traders are coming in, there were some responsive traders there. We need to figure out which side is in control. Are the aggressive traders in control or the responsive traders? Okay. There are a couple ways we can look at delta, right? We can look at it on a cumulative delta where it's kind of almost like an oscillator, almost like a moving average of delta, where every time there is a bar close, in this example I'm using a 1 minute chart, so every time there's a 1 minute close, we will gather that delta and put it into an average. So if that 1 minute candle closed with positive 1,000 delta, we'll take that 1,000, we'll put it into our little cumulative moving average. Okay. If the next candle closed with minus 500, we'll take that into account. We'll put it into our moving average. Okay. You could also take a look at it on a kind of a delta chart where When we get plus 500 delta, it forms a new bar. When it gets minus 500 delta, it forms a new bar, right? So you can do it almost like a range chart, but using delta. Another way you could look at delta is kind of by a tick by tick or a point by point footprint, which we talked about earlier. So you could break it down into seeing, okay, what is the delta at that exact tick or that exact price, whatever you break it down. Typically, I like to break it down by every tick. If the volatility is too high and that chart is just moving way too much, then I'll break it down by like every point. I think in this example, it's every single tick. So when it says 146 delta there, that is for that exact tick. Okay. And when you break it down tick by tick or point by point, you can start seeing where those large clusters of bullish delta or bearish delta are hanging out together, where that node is trading, right? For example, in this screenshot here, we have a very large cluster of bullish delta on the high because we have so much bullish delta back to back to back on the high of that candle. Now, this is also a good example of absorption because that large amount of bullish delta on the high is not getting what they want. They are not controlling that node. If you go back to my volume profile video, we talked a lot about when you have a node building up and you have those rotations back and forth, who is controlling that node? How do we determine who is controlling that node? And if we break that down into more of a delta sense, let's say we have a bunch of positive delta here, we have a bunch of negative delta here, and we're kind of just rotating. Well, let's say price goes up and we start to really build up that positive delta on the high, and we no longer allow price to rotate lower. That bullish delta would be in control. They are protecting that upper portion of that node. If the price tries to go down, the bullish delta begins to come in and price looks for higher value. Now, if they are not doing that and they start to build up a very large amount of bullish delta on that high, but then they are allowing price to trade below that bullish delta, then that would be considered absorption. Those buyers are being absorbed and they are not getting what they want. This is very common in a P-shaped profile where price pushes higher, it puts in a ton of bullish delta on the high of that node, and then it starts to come back down, right? They get absorbed, you lose that value low, it becomes a trapped P-shaped profile, okay? Now, when you have a P-shaped profile that has a lot of bullish delta on the high, but it is protecting that node, and you're looking to extend that upper tail, right? That would not be absorption because the buyers are getting what they want. If you think about a large cluster of buyers, what do they want to see? They want to see higher prices. Okay, so therefore, if the cluster of bullish delta is right here and price is up here, they are not being absorbed because they are getting what they want. They want higher prices. But if there is a very large cluster of buyer delta here, but price is down here, we could say that these buyers are being absorbed because they are not getting what they want. Price is going back down. Okay? So if we look at a balanced candle, all of these buyers up here are not getting what they want. I would not call this absorption in this exact example because the volume is falling off very rapidly. Let's take a look at what absorption would actually look like. You see how in this candle, the volume is not falling off very rapidly. It has a very strong node. It is basically the strongest node of this entire candle where that bullish delta is. Therefore, that would be absorption. Okay. If we saw a bunch of bullish delta on the low of this candle, you see how the volume is falling off very rapidly. I would not call that absorption because once again, the volume is falling off very rapidly. But because there is a lot of volume going with that large cluster of delta, we can call that absorption. Okay, so two things to look for when you're looking for that absorption. Is it giving them what they want? And is there a large volume cluster that goes with the delta cluster? So in this case, the buyers are coming in. Are they getting what they want? No. Is there a large amount of volume? Yes. Therefore, it's absorbed. Okay. So one thing we could look for with these clusters, going back to what we talked about earlier, is who is in control, right? Are the buyers controlling that cluster? Are the sellers controlling that cluster? It goes back to what we constantly talk about with the rotations. When you're building up a node and you're kind of rotating back and forth, that is a 50-50 node, right? If the buyers are in control, as you begin to come back down into that lower portion, that kind of lower 50% of that node, we want to stop seeing seller delta and we want to start seeing buyer delta. Okay, we want to see that buyer delta coming in and pushing us even higher. And then even more than that, we want to be seeing, as price is pushing back towards the high of that candle, the high of that node, whatever it is, instead of seeing that exhaustion where that volume is falling off rapidly, we want to see that volume and delta start to pick up even more. We want to see it building on the high of that candle, being a bit more aggressive. Let's go back to what we talked about earlier. We talked about aggressive versus responsive and how delta is looking at the market buys and market sells. Therefore, the delta are basically seen as the aggressive traders. So if we're looking at a price movement pushing higher and higher and higher, and we're building up these nodes as we're pushing higher, we want to continuously see that bullish delta coming in because they are the aggressive traders, right? This is an aggressive impulse to the upside. We want to see those aggressive traders coming in on the delta. So we want to see that bullish delta basically all the way up. We do not want to see those aggressive traders start to get trapped and squeezed. A good example of that is when we see a bunch of bearish delta on our push down here. You can see the left side is delta, the right side is volume. Look at all this bearish delta, all these red kind of bars here. It's building pretty consistently as they are pushing down, but look at the volume as they are pushing down. You can see the volume nodes on the low here starting to get weak. And then we start to see a lot of delta stuck on the lows here. You see all this bearish delta right on the low of the candle on these like 3 or 4 back-to-back candles. That is a cluster that is not getting what they want. We always talk about sellers and buyers getting what they want. And you think about sellers down here, if they are selling 61.30, 61.32, what do they want to see? They want to see lower prices. Are they getting lower prices in this example? No, they are not. So they can possibly be squeezed out. All of those late sellers that are trading the lows of those candles, if we start to see that delta flipping to the buy side as price is pushing up, what do sellers have to do when they are closing their trade? We talked about this earlier. They have to turn into buyers, right? And what do most people use as their stop loss? They use market orders. Where are market orders seen as, right? They are seen as bullish delta in this case because they're buyers, right? So if we have a bunch of sellers that are stuck on the low of that candle, they are not getting what they want, and now the delta is flipping to the buy side, that means those sellers are most likely getting out of their positions, okay? They are being squeezed out of their positions because we can see that large influx of delta to the buy side as we are going against these bearish clusters. Okay, so on the way down, those bearish traders were in control until they stopped getting what they wanted. Like I said, always think about that pattern. Think about that rotation pattern where we're rotating back and forth, back and forth, back and forth. But then it's not, right? So in this case, we were pushing our lower prices. They were trying to go up, fail. Try to go up, fail. Try to go up, fail. But then we no longer saw those lower prices anymore. So as we are pushing up, these sellers are no longer getting what they want. And the buyers were not really allowing the price to go lower. The price began to rip higher and take those traders out of their positions. Okay, just a quick recap of what I was talking about. Sorry, I'm kind of all over the place when I'm explaining these concepts because it's a bit confusing. It's kind of a spider web of concepts. I have to explain a bunch of different things. But basically what I was getting at is you want to look for these clusters of delta when they are trading together, either positive delta or negative delta. You want to look for when price is kind of rotating around them, building up those volume nodes, and when does it start to break that rotation? Who is controlling that node? So if it was supposed to go back down, but it stalled a little early, and we started seeing that bullish delta come in, then obviously we would say the buyers are in control. And if we were starting to rotate and we stopped going higher and we started pushing down with a bunch of bearish delta, then we would say the sellers are in control of that node. When we have very strong nodes on typically the high of the candle or the low of the candle, let's say this is a 30-minute candle, and let's say this is a green candle, we're going up. If we have a very large cluster of bullish delta on the high, but it is not giving us higher prices, this cluster would therefore be absorbed if it had very high volume, if it showed that volume node. If the volume was falling off very rapidly and we were not seeing a lot of traders taking trades there, a lot of trade action on that cluster, then it would be exhaustion, right? They are being exhausted. They are not finding any more buyers. Therefore, they cannot push the price up. Okay. Same thing is said for the downside. If you have a lot of bearish traders, if we have a candle here, this is going down, obviously. If we have a bearish cluster on the low, if it's very high volume, it would be absorption. If it's very low volume, it would be exhaustion. And for both of those patterns, you want to be seeing the price going against that cluster. So in this case, we would want to see the price trading above that cluster. Because once again, going back to what I said earlier, if the price is down here, this doesn't matter because they're getting what they want. All of those sellers on that cluster are not trapped. They are getting exactly what they want. The price is already going down. Okay. So this would be an example that we showed earlier of a absorption being on the high of the candle. Price is back down, so therefore they are trapped, and possibly they will be squeezed out if price continues to go down. Here's an example of the opposite, where we have a lot of seller delta on the low of the candle. Notice how there is a ton of volume on the low of this candle as well. So going into the low of the candle, you could have said they were being absorbed because there was so much volume. But then on the low of that candle, look at the volume. It falls off very rapidly. The sellers are therefore being exhausted and they are not getting what they want. Notice how there are no lower prices here. And look at where price currently is. Price is going against that cluster. They are building up buyer delta above that node, and that is where our current price is trading. Therefore, all of those sellers are not getting what they want, and they are trapped. And if that trap continued, it could look like something like this, right? Where those sellers are kind of stuck on the low, that bullish delta just continuously comes in and squeezes them out. If you think about what a squeeze is telling you, it is the buyers that are getting into their trade. They're looking for that to maybe be a possible low, and they're looking for higher prices. But it's also the buyers that are getting out of their trade. The buys are coming in from the sellers. Sorry, I should say the sellers getting out of their trade. They are turning into buyers because they are getting out of their trade. Because, once again, how do you close a sell trade? You have to be a buyer. So you have the buyers that are buying to open and the buyers that are buying to close. And that combination of buys can turn into a squeeze. Another example of how we can look at divergence or absorption is when we see delta going in one direction and price going in another direction, also known as divergence, like I just said. So when, in this example, price is going down, but delta is kind of going up. You see from this point on, delta is putting in higher lows and higher highs. Delta is pushing up, price is pushing down. We could make an argument that this cluster of buyers are being absorbed because we have all this bullish delta coming in, but they are not getting what they want. You always have to ask yourself, is the delta getting what they want? Are all of these buyers getting higher prices? Are all of these sellers getting lower prices? In this example, we have all this bullish delta coming in, but price is very clearly going down. So therefore, all of those buyers are being absorbed, they're being trapped, whatever you want to call it. Now, yes, we could argue that this is a bullish divergence. Price is putting in lower lows, but delta is putting in higher lows. So if this continued for a very long time, what I typically say on my live stream is when price and delta are diverging from each other for a long period of time, typically the delta trend is the winner. The prevailing delta trend will win. So if delta was going up the entire day and price was going down, eventually you'll get some type of spike to the upside. Most of the time, the delta will win. If the delta is going aggressively down all day and price is going up, then most of the time delta will win, price will come back down. Now there are exceptions to that. The exceptions are typically the squeezes that we talked about earlier, where that delta starts to very strongly flip directions. You want to look out for that. When you had a very obvious delta going in one direction the entire day, but then it started to squeeze in the opposing direction. Funny enough, this example kind of shows that as well, where delta was going very strongly downward, and then it started to shoot up to the upside. Now, this is not a great example of a squeeze because in a squeeze, you want delta and price to be moving together. So when that squeeze started to happen, where that delta started to push to the upside, we also wanted price to aggressively be pushing to the upside. Now, here is an example of when that happens, where delta starts to strongly flip and move with price. So in this case, we started to push the lows. We probably had a lot of bearish delta down here, which we did. You can see on my chart over here, we had a lot of bearish delta pushing down into these lows, but they kind of got semi-absorbed and semi-exhausted. The large cluster that had a very large amount of volume, they were being absorbed, and then as they tried to push away from that absorption, they began to get exhausted. They did not find a lot of sell pressure on those lows. They didn't find any new volume nodes. We talk about it a lot in my volume profile video. Those two things we always look for. Is it building a node, and is it protecting the node? In this case, they were not building those lower nodes, and the buyers started to take over those nodes that we had before. So the sellers were no longer protecting those lower nodes. So then we start to see the delta squeeze, where it starts to very rapidly push to the upside and break that downtrend, right? So price started pushing up, delta started pushing up. And when you have delta and price very aggressively following each other, whether that be on a cumulative delta sense or a tick-by-tick delta sense, you need to be careful trading against that movement because obviously it is quite aggressive, it's quite impulsive. You would have to look for a pretty strong reversal signal, maybe absorption or exhaustion, to take that as a reversal. But once again, if they are moving very strongly together, be very careful counter trading that. Okay. Now, another pattern that we can look for when it comes to reading delta on a specific level is we talked about earlier using delta on a cumulative sense, using it on a tick-by-tick sense, but also using it on kind of a bar sense. Like right here on the bottom right, I'm using it to create my bars, to create my, I guess you would call them almost like candles. Now I am using a 500 delta chart in this example. So when there is positive 500 delta or negative 500 delta, it is creating a new bar. And what we just talked about is when delta and price are moving in tandem, when they're moving together, you need to be very careful trading against that. But what you can look for is when that starts to break a little bit, when the delta starts to kind of go against price, or when they start to flip and move together in the opposing direction. A perfect time to look for a pattern like this is one of our favorite patterns that we've been trading a lot recently, is the bear flag into VWAP. What do we look for when we have a bear flag into VWAP? We have a lot of buyer delta, a lot of buy pressure pushing back into VWAP, going back up into VWAP. So for example, in this screenshot here, as we are pushing up into VWAP, here's VWAP basically at the top of the screen right here. We have all this buyer delta pushing into VWAP. That is good, right? It means that the buyers are in control. When I want to take that bear flag into VWAP, I want to be looking for when those buyers are no longer in control. When that seller delta starts to take over and you start to flip into more of a bearish market. So in this case, look at this delta flip. You have positive delta, positive, positive, positive. Very bearish delta candle here. Look at the cluster of bearish delta as we begin to try to push above VWAP. It instantly flips into seller delta. And then you see that continuation of seller delta as you are pushing away from VWAP. So that's the sort of thing you want to look for when you are approaching major levels, whether that be value high, value low, VWAP, whatever, high day, low day, just major levels. We want to be looking for those delta clusters coming in and who is protecting those delta clusters. Same thing we talked about in our volume profile video with protecting the nodes. Are they protecting the bullish delta clusters bullishly by trading above them, building more volume above them, finding more bullish delta above them? Same thing with bearish delta. Are they protecting it by building more clusters below them? Are they not allowing price to take the other side of that cluster by trading back above it, etc., right? You need to see who is controlling those delta clusters the same way we see who is controlling volume nodes, volume clusters. Okay, so now that we've gone over kind of the basics of delta and how we're breaking it down into clusters, into nodes, and how we're kind of reading it based on either a cumulative delta, a footprint delta, or even kind of a broken down like bar delta, I can kind of show you my more advanced workspace here and kind of go over a few things. So we talked about earlier using the cumulative delta and kind of seeing when it's following price, when it's not following price, and looking for those divergences. So typically when I am using that in my trading, in my live streams, we are looking at that on a 1 minute time frame. So typically on a ES 1 minute chart and a NASDAQ 1 minute chart. And the same thing that we talked about during my Candlesticks video in the first episode of this series, I am not like overly zoomed in and staring at these individual bars. I don't care about bar by bar what this is doing. It's more so a market structure, which we talked about in the second video in this series. It's kind of all coming together now, right? So I look at this more as a zigzag and kind of what are the higher highs and the lower highs, the lower lows? What's the structure doing? Is it following price? Is it going against price? If it's not following price, is it because it's being absorbed? Are there some block trades coming in? Is there walls being traded, which we'll talk about here in a second? Like, is it being skewed or is it just kind of going against price, right? So don't stare at this on like a bar by bar basis. You don't care about the exact number. You don't care about exactly where it is. Just look at it as a structure. Is the structure following price or not? Okay. And same thing with like the footprint chart. I'm not overly zooming in and over analyzing every little cluster. I don't care about every individual number. I'm not like, oh, wow, there's 120 bullish delta on that high. That means XYZ. I do not care, okay? I don't care about the little details. You care about what it's doing as a whole. Is it building up a major cluster, relatively speaking? Like, for example, if we're seeing every tick have about 200 delta, 300 delta, but now we're seeing this massive cluster that has negative 1200 or negative 1000. That's obviously very important because relatively speaking, that is a very large cluster, okay? So we want to see where these nodes are standing out, where these clusters are standing out. What is popping out at you? What is not following the norm, right? You want to be paying most of your attention to these clusters, to these nodes, when they are on extremes, which we've talked about a lot in this series. Not when it's like in the middle of the candle. We want to see it on the high of the candle, the low of the candle. When it's hitting major extremes like the high of day, low of day, value high, value low, VWAP, whatever, right? Pay most of your attention when it is on the extremes, because that will start to give you those examples of absorption and exhaustion. Don't overanalyze every individual tick or every individual node, okay? For example, like when we're looking at this chart here, what pops out at me is like this bottom cluster right here, because we have a bunch of block trades, which are just big orders, by the way. Block trades are just very large orders. Right now, I look at anything above like 300 contracts as a block trade on ES. If you're looking at my current chart, it's the diamonds. So all these little diamonds are block trades, which if you guys are using Addis, there's an indicator called big trades. At the end of this video, I'm going to show you guys all my settings on Addis if you guys want to match my delta clusters and whatnot. But it's just called big trades. So this pops out at me because it has a very large amount of delta on the low of the candle. It has 1200 delta on the low of the candle, and it has a bunch of block trades on the low of the candle. So you want to pay attention when those things are happening on the lows or the highs of the candle. Now, typically when that's happening live, you're going to see if there's like sweeps or rollover bottoms or pivots or any of the other patterns that we've taught during this series. You want to see if that's happening and it's coinciding with these delta clusters, okay? Which I want to put a little emphasis on. I'm not taking any of these like as exact signals, like these delta clusters or these nodes or whatnot. I'm not using them as exact trades. It's just making my trades, the patterns that I look for, stronger, right? Like for example, if I see a rollover top, if it also has bullish delta being absorbed on the high, then that would be a very good trade. Because not only are we seeing a rollover top, which is a bearish signal, we are seeing bullish traders being stuck on the high. Therefore, if price continues to go lower, those bullish traders would have to turn into bearish traders. They would have to turn into bearish delta because of their stop losses being triggered, okay? So I'm not using this as an exact, I'm going to press the buy or sell button because of the delta. It's just making my trade better or worse, okay? So you want to be looking for when you have those clusters on the extremes, the highs and lows, and if you have those very one-directional candles, you want to see them showing that one-directional delta. If you have a one time framing bearish candle like we have here, we want to see bearish delta basically throughout that entire candle. If we do not see that bearish delta throughout that entire candle, there's probably a problem there, and we want to be wary of that, right? There might be some buyers coming in. We might be trying to flip that candle, right? A good example of what we were talking about on exhaustion is right down here. We have a bunch of bearish delta coming in on the low of this candle, but look at that volume. The volume is falling off a cliff. We have a very strong node of volume right here, which led to price pushing lower, but when we pushed lower, the volume collapsed. and we did not have a lot of volume on the low there. And then we started to counter trade that cluster of delta. So once the buyers began to take over those clusters of bearish delta, we really want to see that buyer delta start to come in, which we did. If I zoom in, there's a bunch of buyer delta on that candle right there, plus 400, plus 300, 530, 200, 375, etc. Right? So once you reclaim a bearish cluster, we want to see it flipping into bullish delta and vice versa. Okay. Basically, long story short, everything that I am teaching you about these clusters is the exact same thing that I teach with volume profile. It's just broken down into more of a footprint aspect of, instead of looking at it as a daily profile, kind of like how we're looking at right here, we are breaking that down into a candle by candle, maybe a 5-minute, maybe a 30-minute footprint. And we are looking at that volume profile based on that candle. And you can break it down even further and look at the delta. So not just looking at the volume of that candle, we're going to see the X-ray vision of that into that candle and see where the buyers and sellers are. Okay. So, okay, we see this very large cluster. We see this very large volume node, but is it a very bullish node or a very bearish node? Who is controlling that node? For example, when we have this node right here, it's obviously a very bearish node. Most of that delta is red. Pretty much all of that delta is red. So that would be bearish, looking for lower value. If they did not get lower value, then that would be a problem. We would say, okay, that's kind of being absorbed. Okay? So looking at delta, looking at order flow in this sense is just looking at volume profile. You're just seeing the X-ray of that candle. You're looking into that volume a little bit deeper to see where the buyers are and where the sellers are. And that can give us those patterns of absorption, exhaustion, squeezes, traps, etc. Okay. Okay. I know this video is getting a little long. If you guys enjoy the content, hit that like button. Be sure to subscribe. I appreciate you guys being here. We're going to go over liquidity. We're going to talk about tape reading. We're going to talk about level 2 orders. We're going to get more into block trades, and then we'll call it a video here. So looking at the tape, you guys asked me a lot on stream, like, hey, do you have a video on tape reading and how to read the tape? And I always tell you guys, it's extremely hard to teach, which basically the entire concept of order flow is extremely hard to teach, which is why I'm kind of all over the place on this video. Hopefully you guys are able to keep up with this. These concepts are really learned from screen time. They are really learned by having the tape, having the delta, having the footprint charts open on your screen on a day-by-day basis, and just kind of seeing the patterns that develop when XYZ happens, right? When a very aggressive buy move happens, when a very aggressive bearish move happens, when it's flipping from one direction to another. You start to get a feel for, okay, the tape looks like this, so that kind of means that we might be flipping, we might be trapping. It's learned through screen time. There's not exact patterns that you are looking for, right? It's just kind of, you get the idea of the flow by just having it on your screen for many, many hours. That's why it's so hard to teach. But I'm going to get into a couple of patterns here that you guys can look for. Very basic stuff. When we are looking at the tape, also known as the time and sales, when you see the orders coming in green, that coincides with bullish delta. What we talked about earlier was the difference between responsive traders and aggressive traders, right? The market traders and the limit traders. When we are looking at a tape like this and we see all these green orders coming in, that tells us a couple of things. That tells us that these are all market buys, but they are also limit sells. There are also limit traders on the other side of that. So all of these green orders could also kind of be seen as red orders. But in terms of delta, when we are looking at it on a delta sense, these are all going to the buy side of delta, okay? Because they are taking liquidity. The traders that are providing liquidity are on the limit side. They are the opposite color of what you are seeing on the tape. So therefore, right now, we're seeing all these orders coming in at 6,900, and they are all on the green side, the buy side. We know that all of those are market buys going into a limit seller. And typically, when you see them all coming in on this very same tick, they're all coming in at that 900 tick, that would be seen as a wall because there is a very large amount of sells on one level. That is a wall of sells. Okay. So all of those buyers are seen as aggressive buyers. Therefore, they are calculated on the delta as being positive or bullish delta. We are not taking all of those sellers that are limit sellers and calculating them onto the delta because they are responsive. They are waiting for the market to come to them. They are not being aggressive. Okay. So when you see a tape like that, the color is telling you the delta side. The opposite of that color would be telling you the limit side. Okay. So almost this entire tape that we're seeing right now is market buyers at 6,900, which could tell us that there is a very large limit seller at 6,900 as well. So when we are reading the tape like this, we are looking for who is controlling these nodes, right? Let's take a look at this 6,900 level here. So I'm looking at the tape, price is coming up to 6,900. Let's say there's a node there. And I want to determine if the buyers or the sellers are controlling this 6,900 node. If I was looking at a tape like this, it would be pretty damn obvious. I would say that the buyers are controlling that 6,900 node. Because every time we come into that price, it is being seen on the buy side, the aggressive bullish delta side. Okay? If they were coming into that 6,900 node and we were seeing a bunch of red orders, a bunch of sell orders, maybe they were at 899 or 898, and we were starting to push down below 6,900, and we kept seeing those red orders coming in. Then obviously the sellers would be pushing that node. They would try to control that node. This is very hard to teach in hindsight, by the way. If you guys want to see me read the tape live, obviously come to my live streams, and we'll talk about this as the orders are coming in. But you basically want to see how those orders are coming in, and based on that level that we are watching, whether it be high of day or VWAP or whatever extreme level we're watching, whatever node level we are watching, how many buys are we seeing? How many sells are we seeing? And where, according to that node, are those orders coming in? Are they above the node? Are they below the node? Are they right on the node, right? For example, let's say we were trading at 69.01, 69.02. And now we are pulling back to 6,900. We want to see how this pullback is traded. Do the sells continue? Because obviously we had to sell to go back down to 6,900. Do the sells continue? Do we see a bunch of red orders coming in at 900 and then going down to 899, 898, 897? Or do we see a bunch of buyers coming in and protecting 900? In this example, we would say the pullback is very bullish. The buyers are buying up 900 very aggressively, and we are continuing to go back up. Okay? So you want to see how those orders are coming in. Are they following the flow of price? Are they going against the flow of price? Are they protecting the node? Are they being absorbed? Is there a wall? Etc. Another thing we can look for on the tape is liquidity. Now, on the tape, I have mine color-coded that it will color the order that came in blue. It's probably hard to see on stream, or on the video, I should say, but there's like a blue shading here. If it colors it blue, that is what's known as level 2. To understand level 2, you would obviously have to understand level 1. So what is level 1? Level 1 is when you are looking at the DOM, the depth of market, and we are looking at the best possible offer and the best possible bid. That is the level 1, the closest bid to our current price and the closest offer to our current price. So right now, the level 1 would be 2.75 and 3.0. Okay. Everything past, so below that bid is the level 2. Everything above that offer is the level 2 for the sell side. So when we see level 2 coming up on the tape, that means that that order, however many contracts that order was, which by the way is on the right side here, these are the contracts coming in. When we see that level 2, that tells us that the size of that order was too large to be filled on the level 1. The best possible bid or the best possible offer was not large enough. It did not have enough limit traders there to fill that entire order. So it traded on the level 2. It traded above the best possible offer or below the best possible bid. It is hitting the level 2. Now, you'll hear me say on stream, if there's a bunch of level 2 orders coming in, like this example here, a lot of the tape is blue, that we have very low liquidity. We have bad liquidity. Why does that matter? That matters because if we think about high liquidity, aka high limit orders, a high amount of volume on the limit side, that would be sticky. Price would stick to those levels more. Because as we saw the orders come in, as we see the orders come in, I should say, it would take a while to break those levels. It would take a while to break those offers or break those bids because there is so much volume, so much liquidity on those orders, or on those levels, I should say. But if there is a lack of liquidity and we keep seeing these level 2 orders come in, you can blow through those offers or those bids very easily. What does that mean for your trading? Well, think about what's happening. If the price is a lot stickier, it would be moving a lot slower, and I could manage my trades a lot easier. It wouldn't just be blowing through these levels and hitting my stop loss right away. So if we think about very high volatility, that will typically coincide with very low liquidity. You can have very high volatility with high liquidity, but that would mean that you would have to have extremely high volume as well. Because if you have very high liquidity and you are still trading through those levels very quickly and you don't have that sticky price action, you would have to be trading a ton of volume. Okay. So vast majority of the time, when you're seeing these level 2 orders coming in consistently, that means that your liquidity is pretty low. Okay. So once again, if you see a bunch of blue orders on my settings on stream, that means there are a bunch of orders that are hitting the level 2. They are too large for the level 1 liquidity, and they are hitting the level 2, whether that be maybe 1 tick of slippage, 2 ticks, a whole point, maybe 5 points. You don't know, right? You're going to have to compare that price that is showing on the tape to where your current price is. Okay. Sometimes there could be very large slippage. Sometimes there could be very low slippage. By the way, what is slippage? Slippage is when, let's say I press the sell button and I wanted to sell 100 contracts. The best possible bid is only 25 contracts. I would have to slip through that best possible bid until my 100 contracts was filled entirely. So I would take the 25 contracts at that best possible bid, and then I would keep going until my entire order was filled. Now, that really does not matter for pretty much anybody that's listening to this video, because you guys are not going to have slippage on ES or NASDAQ. We're just not trading that kind of size. That's for the big boys to worry about. But that is what I mean by slippage. You're hitting through the best possible bid or through the best possible offer. Okay. So when you see a ton of level 2, long story short, be very careful in your trading. It means there's very high volatility. You're able to push through these levels very quickly, and you'll see a lot more price action that is very wide price action. You're not hanging out on certain nodes. You're not building a ton of clusters. You're just kind of whipping all over the place. Okay. So be very careful when you are seeing those level 2 orders come in. So whenever I reference level 1, I am talking about the best possible bid and the best possible offer. You'll also hear me say like our liquidity is good or our liquidity is bad. I'm typically referencing how many contracts are showing on that best possible bid or offer. That's also something that you guys will really have to learn from screen time. There is no exact number. You have to see on a day-to-day basis what the average is. So like right now, for example, our average would be like 50 contracts on ES. If you see like 40 to 50 contracts on that level 1, your liquidity is okay. If you're seeing 10 or 20, it's very low. Now, right now, we're only seeing like 10 contracts. It's because when I'm making the video right now, it's on the after hours. After hours is going to typically have low liquidity. Okay. So there is no exact number. You just have to get a feel for what the average is and understand, okay, that's above average or that's below average. All right. So one thing you guys can do with tapes is you can filter them, which I'll show my settings here in a little bit at the end of the video. But what I like to do is I like to filter my tape by 25 contracts on ES, and then I have a block trade tape. So by the way, what are block trades? They're just very large orders. So block trades could be whatever you want to say, like above 100 is a block trade for you, maybe above 300, above 500, whatever. It's kind of up to you. My block trade tape is anything above 100. And then if I show the block trade on the chart, it's anything above like 300. Okay. So I like to filter my tape to get all the bots out of there. If you don't filter the tape at all, you start to see a lot of bot orders, like high frequency trading bots. So like if I take this filter off, watch how fast my tape is going to move. You see how much faster it's moving? Because you see every little order coming in. So I typically like to filter it by something that makes it so the orders are coming in pretty consistently, but I'm not getting flooded by those bot orders. Now, because I just put the filter in, it's going to have to wait for new orders to come in. That's just what Addis does. So until a trade comes in that's above 25 contracts, it's not going to show on the tape there. I like to filter my block trade tape by anything above 100. And then for NASDAQ, I don't trade NASDAQ actively, so you guys would have to filter that based on what you think is good. But just find something that cuts out the high frequency trading bots. So something that's not moving just overly fast, right? I think I filter mine by 10 contracts. Now, I'm not going to get into the exact ins and outs of trading block trades. I have a whole video on that. It's called How to Trade Block Trades. But basically what you want to look for, especially when you have them filtered on the tape, is kind of what we talked about earlier. When price is moving in one direction, is the delta following that direction? Same thing with the block trade tape, the large tape. Are the large traders following that direction? So like if we're very aggressively moving on the buy side, is our block trade tape also very aggressive to the buy side? Kind of like the example I showed earlier where the tape was very one-sided. Is the block trade tape, are the large traders very one-sided following that price action? Okay, so you're looking at the tapes, even though they're filtered differently, you're looking at them the same way. How fast is it moving? How good is our liquidity? Are we getting a bunch of those blue orders, right? Those level 2 orders? Are they following price? Are they protecting those clusters, right? If I want this cluster to be protected very bullishly, am I seeing that on the tape? Am I seeing a lot of green orders? And when it tries to push below that cluster, it's not getting those red orders. It's not getting that bearish delta below that node, right? Same exact thing on the large tape. Okay. Another question I get asked very often on like my DOM and my level 2 stuff is, do I actually watch level 2? Like, do I have a heat map? Do I watch the flow of the liquidity on a heat map sense where I'm watching every single tick? How many orders are resting on those ticks? How are they moving? Are they increasing or decreasing the liquidity, etc.? Something you guys are probably familiar with is something like Bookmap. They're a very common one, and Jigsaw as well for heat maps. Addis also has heat maps. I am not a heat map trader. I have tried looking at all of the level 2 and looking at the icebergs and all that liquidity. I have found over the years that it's not very helpful for my style of trading. It's kind of distracting. It makes you feel like you're doing something fancy, like you have kind of cracked the code, you're like seeing into the matrix. But personally, I really think it's distracting, and I don't think it provides any value to my trading. A funny story about that is when I stopped using it, it was completely by accident. I forgot to keep paying for my level 2 subscription on Trade-Evades, and one day I just noticed, hey, I don't have my level 2 data anymore. And I was like, I didn't really notice a difference. It didn't really affect my trading negatively whatsoever. I actually was enjoying not seeing that data. So from that day on, I just never paid for level 2 data again because it was not providing any value to my trading. So that's why I'm not teaching you guys any of that stuff in this video, because I do not use that style of level 2, that style of DOM trading. Okay, so finally, I'm just going to quickly show you guys all of my settings that I think you guys need to use if you want to have your charts looking like mine on a delta footprint sense. So here are my cluster settings for my 30-minute chart, which, by the way, I typically use my footprint on a 30-minute chart. If you guys want to copy my settings for this middle chart, this is just for the cluster settings. I'm going to show you the indicators here in a second. The only other important setting for the delta stuff, the order flow stuff, would be making sure that you have your cumulative delta set properly. So here are my cumulative delta settings. And by the way, I like to use a moving average on my cumulative delta just as a way to monitor the trend. So if you guys want to have a moving average on your delta, that is this one right here. It is set to a 60 period because I like to watch my cumulative delta on a 1-minute chart. So it's a 1-hour average. The other thing you want to track are the block trades, which I showed you for my other chart, but these are the block trades for my 1-minute chart. And finally, the stacked imbalances. So I talked a lot about clusters in this video. Another way to visualize these clusters is what's known as a stacked imbalance. Basically, all it's doing is it's looking at the delta in that general area, that range. That's what that range setting is. It's looking at it in that general area and seeing where the delta is very heavily one-sided. So if it's very one-sided to the buy side, it will show you a bullish imbalance. If it's very bearish, it will show you a bearish imbalance, right? So these boxes right here, that's just basically showing you the clusters. It's just a different way to visualize the clusters. So instead of seeing the clusters on a chart like this, you're seeing them on a chart like this. And finally, here are my tape settings if you guys want to copy my tapes as well. I appreciate you guys sticking around for this video. I know this one was all over the place. This concept is extremely hard for me to teach, which is why I don't have a lot of videos on tape reading or liquidity. I do have a bunch of shorts. If you guys have not seen my YouTube shorts on this topic, I have a bunch of shorts that cover absorption, liquidity, the DOM stuff, etc. So be sure to check those out. This is much easier to teach in a live format. And we talk about this pretty much every single day on my live streams. So if you guys are still confused on this, be sure to stop back by for our Q&A that we're going to have for this video, but also stop back for my live streams. I do this pretty much every single day. So be sure to check that out. All right, guys, I know this was a long video. I appreciate you guys sticking out to the end. Be sure to hit that like button and subscribe. Because this is the end of the series, we will be doing that laptop giveaway soon, so be sure to send me all of your tickets to that email at the bottom of the screen right here. Be sure to follow what is on your screen to get involved in that giveaway. We will be doing that laptop giveaway very soon after this video is released. If you guys would like to try out Addis, I am putting a promo code on the screen right now that will give you, I believe, a 5% discount on all of the different licenses on Addis, which, by the way, Addis very rarely does promo codes. So if you guys are wondering why it's only 5%, that is actually a lot for Addis. They do not do promo codes very often. So if you guys would like to try them out, use that code on your screen. They're awesome. We use them every single day on our live stream. If you guys want to get a 30-day trial, you can also check the link down below in the description. Finally, guys, just as a thank you for being here, this has been a very long series. I appreciate you guys sticking out, watching this whole series. Thank you all for being a part of this series. I appreciate you guys. I hope you enjoyed the content. If you did, be sure to hit that like button. Be sure to subscribe. If you guys have any questions, please put them in the comments down below. And that's it. That's all I got. I appreciate you guys being here. I'll see you guys in the next one. Peace, everybody.